Hello everyone, this is Matt Curfman with Richmond Brothers here for your July 2019 edition of Matt's Minutes. Thank you so much for tuning in. Well, we're halfway into the summer and it's winding down rather quickly. Pretty soon we'll be coming up on Labor Day. Kids will be back in school and the fall will be upon us. So a couple of topics I wanted to touch on for the midsummer. One, broadly speaking, when you look at the markets, a lot of people will consider the markets to be the Dow Jones, the S&P 500. So in general, even though there has been periods of volatility on a daily, weekly, or even monthly basis in the 7 months so far this year, broadly speaking, most equities are positive. If we kind of isolate equities that we've managed within your portfolios, we have been really competitive, if not exceeding those broad benchmarks. Now keep in mind, that's not your whole portfolio. A lot of you have some safety nets, some special income planning, some low duration bonds, some other assets. So if we categorize just the equity portion, that's really what I'm referencing here. So we're pretty pleased with those returns. Obviously it's always good to get more, but certainly 7 months in, we're pretty satisfied there. As far as the overall economy, we continue to have very low inflation, so we're not seeing cost of living go up dramatically. Even though this is a little bit after the end of July, the Federal Reserve did end up lowering the short-term interest rate, which again makes money cheaper for borrowers, and that would be, for example, mortgage rates could come down, car loan rates could come down. If corporations want to finance things, usually money is a little bit cheaper. So while in the near term that's seen as a positive, we would kind of put a cautionary flag out. I've spoke before on this topic where, in a growing economy, that's when the Fed is raising rates. So as the economy has maybe slowed a little bit, hasn't stopped growing, but it's not growing as fast, and the Fed lowers rates, we want to look ahead, 12 and 18 months, and that could be, it's not guaranteed, but it could be a sign for potential upcoming recession. Quarter 2 GDP, gross domestic product, ended up coming in at an annualized rate of 2.1%. The first quarter of 2019, that was at a 3.1% annualized rate. So expectations for the quarter, for the second quarter, were 1.9%. So we expected 1.9, we ended up at 2.1. It's still a little slower than quarter 1, but the idea is we still have a growing economy. The other thing that I've noted in a lot of headlines is consumer confidence is at a pretty strong high. The metric they use to measure that, if you look at the last rolling 12 months, consumer confidence as a number has averaged 130 points. And to give you some context, that's a 47 point increase rather over the average of the last 7 or 8 years. And so that's a pretty significant margin. That gives you an idea of how most of us feel about our economic situation, about income, about paychecks, about our jobs, ability to pay mortgages, and so on. So, as we kind of take that data and we look at what do we expect as we wind down the summer and move into the fall and really the second half of the year, U.S. and China is still an outstanding item as far as tariffs. Trade wars are topics you see continually hit the news. In the recent days leading up to this recording, there were some really big swells and decreases in the market with extreme topics and headlines on U.S. and China. That's still an unknown. By and large, we would still expect a robust and growing economy, which means we don't have to run for the hills and get ultra-conservative quite yet. We still believe the path to some sort of recession, based on all of these indicators, would potentially be in 2020, maybe a little more narrowly around the summer or second half of 2020, especially with presidential election cycles coming up in the fall of 2020. We remember that was one of the triggers for midterm elections in the fall of 2018 that added a little bit to volatility. So given all of that, what are some action steps? One, we want to continue to skim off the top. If we think something still has room to grow, it doesn't mean we shouldn't take some off the top when it's in a position of strength, meaning prices are higher. Two, if we think something has kind of topped out, I think we continue to manage the overall equity exposure. If you had, for example, a 50% equity exposure now, the question is, as we get closer to recession, should we keep steering that ship? So now maybe we keep targeting a 40%, 35, 30%, and then continue to shore up safety nets and downside protection. So that would be your money markets, your low duration bonds, guaranteed money such as fixed or fixed equity indexed annuities. Those are all areas that fall within that guaranteed realm. For those of you that do draw income, we want to continue to look at your forward draw over the coming 3, 6, 9, 12 months, if possible several years. But look at how much do we have in money markets, bonds, and access to guaranteed assets. So if we did go into recession, you're still never going to have to touch your equity bucket in an ideal scenario. Lastly, I think it's important that you continue to work with your advisor and our team on your risk-alize number so that it's a conversation piece to understand what your risk expectations are versus where your portfolio's at. And we can have a discussion, are they in line, are they out of sync, and do we need to slowly move in whatever direction that would be. And so continue to bring that up as you talk to your advisors and amongst each other. A couple of last notes. This month that I'm recording this, August, is actually Richmond Brothers' 25th anniversary of being in business. So excited to have a lot of familiar names who were with us 25 years ago tuning in to watch this show or this clip. And we've had a couple of different events so far with a few more to go over the summer in celebration of that. So on behalf of David, myself, Tara, and all of our Richmond Brothers team, thank you for being part of our family. And then coming up in about another month, September 10th, it's a Tuesday night, our halftime report where we typically present a live session at Ella Sharp will be coming up. So watch your mail and watch your inbox for those invitations. And for those of you that don't live right here in the physical area, we'll also have some video recordings of that available for you as well. With that, I will leave you to the rest of your summer. If you have any questions, thoughts, or comments, please feel free to let us know. Questions@richmondbrothers.com. Thank you so much for tuning in, and have a great day.